You're listening to the Practical Wealth Show with Curtis May.
All right, Practical Wealth Nation, welcome to another episode of the Practical Wealth Show. And I have a really fascinating guest today that we were actually chatting a little bit before the call. So I was like, all right, so now you got me revved up. We're ready to start. But I want to introduce you to Mr. Ken Lewis. And so I'm going to read a little bit of his bio here. So Ken is a results-oriented professional with more than 25 years of leadership experience across a broad range of retail and technology organizations. He's currently the chief executive officer at APMEX, the largest precious metals retailer in North America. To give you a hint, our call is going to be about gold, and precious metals. And so what we're going to do is we're going to talk about that, where it fits into your portfolio, different ways to own it. Ken, I'm going to cut that short. Let's tell him what I didn't tell him. Okay.
Yeah, no, thanks. I mean, I appreciate it. I'm kind of relatively new to the gold business. Been here about 8 years now. Was promoted to CEO about 3 years ago, and I hope to provide some insights on why gold ownership is right for anyone out there, and really talk to you about some new ways people can own gold that is not so much tied to Wall Street and owning these index funds. So I think there's some other options for people out there to think about.
Well, that's what we're about here. So what would you? Why are precious metals suitable for modern investors? So in your mind, how does it complement one's portfolio?
I'm a numbers guy, so I tend to go back and just look at historical performance and look at what having precious metals in your portfolio does for you. There's proven correlation out there that precious metals can work, inversely to the dollar. It can also be a nice hedge against the equities markets. All you have to do is just, like I said, go back and look at 2008 as an example, when the equities markets got crushed. Mm-hmm. Precious metals did very, very well back then. When the dollar seems to weaken, metals do well. I'm a big believer in you got to have a portfolio strategy, and metals should be a part of it. You should not just invest in only metals, because it really is just too risky to have it all in one area. But mm-hmm. having it as an overall portfolio strategy, I think, can be a great one for most people.
And so when you say hedge, just to I always like to keep stuff simple. It's
Sure.
It's insurance, or kind of like insurance against the dollar crashing.
It's a good point. Yeah, I mean, all you have to do is go back when I think it was 2011, and the U.S. debt was downgraded, right? And when that happened, the equities markets took a hit, and the dollar skyrocketed. I mean, excuse me, not the dollar, but gold skyrocketed. Mm-hmm. And gold is kind of looked at as a safe haven investment. You tend to see people dive into gold and silver. I should just say gold. Mm-hmm. They dive into metals when they're seeing the economy struggling a little bit. They're seeing events in the world that are going on. They feel like the dollar's not predictable. And so it's a natural offsetting, if you will, investment. It's kind of like bonds and equities, right? You got to have something that kind of maybe works inversely at times to kind of manage that risk in your portfolio. If you put all your eggs in one basket, depending on time horizon, that can be very risky. I'm a big believer in wealth preservation at this stage in my career, and owning some of my investments in gold is a good, wiser decision from a portfolio management standpoint, not just because I'm trying to maintain its value, by holding gold only.
I always call it, you got to play defense. Defense,
good point,
wins championships. Golden State is they can score, but they play really good defense too. So you can't lose money. You don't want to lose purchasing power. So that's good. So, I have all the range of people calling me, and we want to talk about, cryptos and blockchain. I want you to go into that, because, what do you think you're talking about? That technology, which is not necessarily cryptocurrency. Compare metals. Do you think precious metals are a safer choice than cryptos, and why?
Well, I don't think there's any doubt they're safer and they're more predictable.
So glad you said that.
and they're tied more to world events. You've seen probably in the last couple of days, cryptos have had a nice run up. And if you ask somebody, well, why is that? No one has an answer. I mean, it's very hard to predict. Most now, by the way, I want to be careful. Some cryptos are modernizing. They're going to what they call stable coins, and they're having underlying assets backing the value of the crypto, which I think is where it needs to go. But if you own a Bitcoin or some of these other products, there's no intrinsic value. There's nothing backing it. It's you're gambling. You're just taking a guess. And when it went to 15, 16,000, like it did a couple of years ago, it was pretty fun. You go out and you get in at 1,000 and all of a sudden you have something that's worth 100% or 1,000% more than what you invested in. It's pretty hot. That's not the case lately. But I do believe crypto's brought to light some new technologies that I think companies like ourselves and others are going to start to leverage. Things like the blockchain. Now I want to be careful. I don't want to get too technical here, but blockchains can be multiple different types. There can be open source where where anything's out there, or you can do things like permission based where access is greatly restricted. And what it does is it just provides security and clarity about ownership, and the data flows through it at a much faster pace than traditional databases. So again, it sounds complicated. The reality is it works very, very well in the financial systems to be able to keep track of ownership entries and frankly, to make sure nobody can go in and hack and change those asset values. So we've actually, when you look at gold, you can own it, in my opinion, three ways. You can go out and own an index fund, a GLD. You can go out and own physical, which, we're the number one seller of physical in the world. So, we're a big fan of that. Or you can go out and own it in a digital format, leveraging blockchain technology. And that's what we've recently developed because we realize, and it's funny, we look at our demographics with this new product, we get a lot younger investor, but at the same time, the older investors love it for its financial flexibility and for its attractiveness from a price standpoint. So when you buy physical, you're buying, and gold can be 2-3% above spot. And spot's tied to the COMEX typically, and you're buying at 3% over. And then
so for y'all don't know that, just to cut you off, spot is wholesale. Correct. So when you see it on the news or on you see it like on the internet, that's the wholesale price, and the spot is the person who sells it has to mark it up a bit so they can stay in business.
Correct. I mean, there's a fee that you get in with any commodity that the price is set, and there's a couple of ways with which it is set, and then it trades live in the open markets, and then retailers will set a spot for consumers, which sometimes is a little bit higher than what spot is, but it's close. But my point is when you own physical, you're going to pay 2-3% over spot, and when you go to sell it, what you can sell it for can vary, but let's just say you get spot for it or 1% over, so you can have a 200 basis point spread, and you have a pretty high cost to getting into physical. But many physical buyers love the idea of having it in their homes, having it off the radar, off the grid, if you will, have complete control. And I'm a big believer in that, and I own a lot of physical myself. And that works great for that type of consumer. They tend to be a little bit more skeptical of the government, a little more skeptical of the financial systems, love to have protection completely off the grid, if you will. Digital, what we've built here recently, is a combination of physical and paper. What we did basically was we own a physical position. We actually go and work with the Royal Canadian Mint in Canada. We take a physical position of metal, and then we assign partial ownership to consumers as they want to take an interest. So physical metal is always there. The ownership interest is written to the blockchain at all times. It's an independent verification of your ownership interest. So if you ever want to make sure what I'm telling you own is real, you just go to the blockchain. You can verify it independently of my systems, which gives them protection. The government of Canada stands behind it, so you're not going to have a risk of loss of metal disappearing as well, which is very important. And then finally, you get into this metal at 30 basis points over spot. So it's very economical. You can link your bank account to it. You can pay with a credit card. You can pay with Bitcoin if you want to. And you can take a buy and a sell literally within minutes of each other, within seconds of each other. And probably one of the more important things for us is if you want to go out and you want to take a position, maybe $5 a week, $10 a week, $20 a week, or whatever, you can actually do a continuity program on the system where you could say buy $50 in gold every other week and do dollar cost averaging so you can build your wealth that way as well.
Wow. I was going to ask you that. That's fantastic because that's a good, for people to get into it and for kids, to start your kids saving money. I'd rather have them saving gold and than in a savings account at 0.34% or something like that, and that's a product, like my kid, I have two teenagers, they both work and I make them save, 20% out of every paycheck, so saying that I'd have them, dollar cost average into this, and now, because now they got their money into it, they'll start especially my middle one, Jade, she would like look at the prices every week.
What's funny is we launched this program 3 months ago. We've already done north of $3 million in revenue. And what's amazing is 45% of our transactions are people doing repeat transactions or reoccurring transactions. They set it up right in the system. It's very easy, a couple clicks. And now at full disclosure, it's 15% of the revenue. So it's not a lot of dollars, but it's a lot of transactions. And you know what? If we can support people getting in the middle at a young age or people who really truly believe in dollar cost averaging, then we're glad we can do that. Our hope is over the long term, maybe that customer becomes a little bit more well-heeled and has more dollars to invest.
Right.
But, our job is to bring, capabilities. And, one of the important things we built in here for your listeners to know is the physical buyer, which again, I'm a fan of, and we do a lot of business on that side. We want to make sure that people who own digital can convert to physical in a couple clicks on the application. And so right there on the tool, you can buy Eagles or Maples or gold bars or silver at any time, whenever you like, and just convert it and it will ship to your home literally the same day.
Wow.
So we give you a little bit of all worlds, right? We give you that ability to take a very quick position at any dollar size you want. You can liquidate it on a moment's notice. It costs a lot less than ETFs or even physical. And then if you ever want to convert it, you're more than welcome to. So, and then the final thing most people don't realize it is technology today is allowing you to link your bank account with various other tools and make it simple for you. We actually use a third party to do that. And 50+% of our volume dollar wise are people simply linking it to their checking account and moving money back and forth between their checking account and OneGold whenever they want to, which we think is great.
Back and forth. Explain that.
So what you can do is you can we'll have customers move dollars over, put in $10,000,
right?
Buy $10,000 in gold the next day, sell it, 30 days later if they want, or sell 20% of it, move that $2,000 back to their checking account, all with just a couple of clicks.
Wow. So if they want to hold it, so let's say you don't want to keep a lot of money in savings.
Right.
Savings, FDIC, blah, 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 not making money, but you want to hold a position in real. It's funny because I try to look at, people look at gold fluctuating up and down, but I don't see gold in my mind is constant and currency fluctuates up and down. So, you know what I mean? You have to retrain your brain to think like that. How many ounces of gold would it take to buy a house? You know what I mean? So I try to trick my brain. So, okay, now I can see what the real price of the house is. If the dollars fluctuate. So anyway, you got to learn how to, because the Fed will play games with your mind, and you need to understand what's real. But I think
there's charts out there. There's charts out there, like you say, about inflation. You just go look at the value of the dollar over the last 50 years, and then go look what the value of an ounce of gold has done, and you can see that depending upon the times and duration you look at, you're better off having gold as a long-term investment over a dollar. It's really your time horizon drives that probably more than anything.
Yeah, because it's like. The country's not probably no time in the near future going to go on a gold standard. But I tell people you can be on your own gold standard.
Sure.
And so it sounds like OneGold is the way to do. Like we teach people a system called privatized banking, and using permanent insurance as a place to store cash. But because you need to be able to leverage money, but you can also, because I kind of do this, right? Where okay, I'm looking at, all right, I got to put it here. I want to leverage it so I can do other stuff, but I need to run some of that money through gold. So I have my own Bretton Woods, and where I'm protecting my storing money in real money. Because let me ask this question: so when you own this is fascinating, Ken, let me tell you, there is no counterparty risk with right. It's not like an ETF. You can because what happens, everybody, if you had ETFs, you own a claim to the money.
Right.
But with OneGold, you own the gold. You have a claim to that gold. That your share is your share. It's just as a matter of fact.
On our FAQs, we outlined a scenario where, if a consumer, let's just say OneGold went belly up for whatever reason, the consumer still owns the gold, and the Royal Canadian Mint will work to get you your gold ownership back. So they have that logged on the blockchain, and they know They don't know your name. They actually know your unique identifier.
Mm-hmm.
And which is very important, we think, as well, because we don't want people's personal information floating around anywhere in the ecosystem.
Mm-hmm.
We want to protect that as well. But they're positioned to be able to make you whole on the metal that you have ownership to, as long as you can prove that you had that ownership at the time. So it's very important. And I'd go a step further. One of the things we're looking on, and OneGold is, we've just launched 90 days ago. We're looking at how to add new features over time. We want gold to grow in popularity. We want, and frankly, whether you use my platform or someone else's down the road, the more people who own gold, we think that's going to be better. And so we see phases of gold evolution. We can see gold maybe as our next step. We're actually looking at offering a yield product.
Mm-hmm.
And for your listeners, you go, a yield product, you're going to pay me to own gold. Well, the way we do that, and I think it's very important, is a company like APMEX has over $100 million in inventory sitting down in our vaults today.
Mm-hmm.
We actually borrow money from banks sometimes to have cash on hand to procure more metal. Why not let the consumer own the metal rather than the banks own the metal when I borrow? So when I borrow, I actually physically move the inventory into a segregated area, and the banks then loan me money against that. And the banks actually own it, but they actually provide me cash as well to run my business.
Mm-hmm.
Why not let the consumer own that? Well, the consumer now gets paid a yield because I'm not paying the bank a certain percent. I'm now paying the consumer a percent, and they get to ride the wave of whether gold goes up or down, whichever way they want that to go, or we'll see that perform. They still have that position, and they're getting paid a yield. We would never be able to do that in a more traditional physical ownership world. We can only do that in a digital space and still offer those same protections, like you mentioned earlier about the counterparty side, that we can offer with the Royal Canadian Mint. So that's coming. We hope to offer a yield product in the next 45 to 90 days, somewhere 45 to 60 days. We'll see. We're working on it. And then beyond that, we can envision a day where, and again, it's up to the consumer whether they want this, but why not be able to borrow against your metals? One of the things we keep hearing from clients is, I'd rather not go to the bank and do a second mortgage on my home. I'd rather be able to take other assets I have and make it more convenient. We think there's going to be an ability for people to actually be able to borrow against their gold if they choose. I'm not a big fan of borrowing necessarily against assets unless you have to. But if that's something that you need in your life, you need to pay for kids' college or this or that, you're going to be able to do that one day by borrowing against your metal. And the beautiful thing for me is there's no risk. I'm holding your gold, so I don't have the risk of you defaulting because I have the gold sitting there you're borrowing against. So I can offer very attractive rates that the banks they're not going to offer you when you go to take a second mortgage on a home.
No, I love it. That's what we do here, right? So that's cool, because we call it building collateral capacity. So you save money,
good one.
And you can, you want to store money in an asset that you can use your money as collateral, and not actually, because a lot of people have money in savings, they pay cash.
Right.
You finance everything you buy, because if you pay cash and you want to get your money back, you've got to put the cash back, which is a payment. A deposit is a payment, same thing.
Sure.
And but you don't count for the opportunity cost of emptying out the tank, I call it.
You got it.
And that is absolutely fascinating. So let me ask you two questions. I'm trying to calm my mind now. You got me very excited over here. So, so our listeners know influences the price of precious metals.
Great question. And I think if you go and talk, I've listened to many different analysts try to speculate on gold's going to go up, gold's going to go down, and they give you all the reasons and all the correlations they've run against it. I think there's a few though that pretty much everyone can agree to, and that is, the value of the dollar is one. Tends to be when the dollar goes up, metals tend to face a little bit of a struggle. When the dollar goes down, metals tend to perform or outperform, if you will. And that's a pretty common one that you see out there. Interest rates is another one, although interest rates has not been as consistent as you would like in terms of drawing correlation. But as inflation goes up, tends to be a bad guy, if you will, for metals. Now, again, I say that's not consistent because there have been times in our history where that doesn't always hold true. So you have to be careful. There are things like world events that people need to pay attention to. Obviously, when there's instability, when there's all trade issues that were being popped up there, that was actually very good for gold, because instability in the world events, in the world markets, can be very good for gold because it's a safe haven type view.
Right.
The equities markets, I tend to look at it as when the equities markets, they're trading at all-time high multiples right now. When they tend to perform very well, gold oftentimes will act inversely. So when we see the equities market start to pull back, I think you're going to see gold and silver do very well. I will say, and I have a theory on this, and that is with the recent pullbacks and the quick recovery of the equities markets, I do believe investors are becoming a little more patient and less quick to move to safe haven investments. So we could have a 2,000 point pullback, and consumers are not going to jump to gold or silver as quickly as they would have in the past, just because they want to see if it's going to bounce back. So it's going to take some corrections there. You also see the final thing I always highlight is there's no doubt that our politics in the U.S. have a little bit to do with it. I think one of the things that's definitely out there, and you can go read about this on the World Gold Council puts out some really good articles about this, but central banks are really starting to consume precious metals right now. They don't want to be holding dollars. They'd rather hold metal than dollars. They don't want to be dependent on the U.S. government as much in the future and their fiscal policies. And so you're seeing a big rush, if you will, of consumption of gold by various central governments around the world.
Yeah, China, Russia.
You got it. Even the U.S. holds a ton of gold, believe it or not.
Yeah, I mean, so that's what I mean. So when they that's why you see. It's funny. I tell people, look, if you know what's going on, I had a mentor tell me, you'll know what to do.
Mm-hmm.
And so so if they're buying it, there's some value there.
Yeah, sure.
And that tells me, we tell our clients, listen, stop doing what they tell you to do and start doing what they do,
Right.
And what do banks do, right? And so they're telling you one thing, it's no value. It's a barbaric relic to the past, but they're buying like it's going out of style. So guess what? Maybe you should get some.
Well, you're spot on. And again, Trump's a little unpredictable, or I think our leadership's just a little unpredictable. And I think that unpredictable nature and some of the strong arming that's occurred over the last couple of years has made foreign governments nervous. And, they'd rather hold gold than the U.S. dollar so they can control their own destiny. And that's proven. The data's out there. Anyone can go read up on it. I'm a little surprised gold and silver hasn't gone up more than it has over the last 9 months.
Mm-hmm.
It's seen a nice return, if you will, but not the kind of levels that I think it can get to in the next 12 months. But we're all crossing our fingers. I'd love to see a higher gold price.
Yeah, I just don't think people understand it. I don't think they get it. And then, you'll look at, because, the banks don't want you to understand it. And I think that they purposely, it's no big deal. They downplay it and,
Sure.
Bubble vision. They're not trying to hear about gold. So you really kind of have to do, we teach our clients, listen, you've got to do your homework. It's your money. And you need to be the master of your money, and you've got to do homework, and you've got to figure out why things happen. I started studying Austrian economics, so I wanted to know, understand the business cycle there, because I was, a typical, restaurant rep, and I was like going through all these classes. I'm like, what is going on? I was tired of the pat, oh, don't worry, the market's going to come back. No, I want to know why it crashed in the first daggone place,
Right.
And so I started getting into that. I was like, oh, okay. Then you start to think more from a macroeconomic viewpoint, but to your point. And I think that then you see where it fits into your overall strategy.
Yeah, I think so. And look, I depending on who you read, it says, you should own 5 to 10% of your investments in gold. Some people quote it as high as 20, 25. I'm a big believer, and I'm probably more in the 10 range is where I target. I got way more exposure, though. I run a gold company, so I'm a little different. But I think you'd be wise to have some percentage of your investments in metal. And then, like I mentioned earlier, I think you can do it with physical, and I think that's a solid strategy. And now with some new concepts like the digital product we're offering, I think it's an easy way to take a broader position that you can easily liquidate it at a moment's notice whenever you need to.
Yeah, I really like that. I mean, easy to get to. You could get it, because you got to create storage and the whole, other stuff that goes along with that. But it's good to. That's why it's good to have that in some silver so that you can make change.
Well, and silver, the one I tell people on the digital product, and me personally, I've done.
Do you do that also?
I do. And what I was we have silver on the product. And look, if you want to own $50,000 in silver, where are you going to find it? Where are you going to put it?
Mm-hmm.
It's pretty big. So
they're like $16, $17. What is it now?
Yeah, you got it. It's $15, $20 right now an ounce.
Yeah. So a coin. So if you bought them by the coin with the markup, it's probably like $16, $17. But that's a lot. You get $100 and have something. That's why I like people buying it, because at least you got you $1,200, $1,300. You only get one gold coin.
Yeah. Well, at least you can store a gold coin. You start having to store tubes and boxes of silver. It's pretty challenging. And we'd like to remind people in the digital space, it's much easier to own silver than it is to physically have in your home, because it takes up so much space in the home. And look, it's fully insured, and there's other things that you want to think about. But like I would tell your listeners, I do believe in physical ownership. I just think the digital side is a nice complement to it. Continuity programs, other things, it's going to be a win. And look, I can't sit here and tell you gold or silver is going to go up. What I can definitely tell you is you'd be silly not to have it in your portfolio.
It's because you don't need it. Gold has been like an ounce of gold buys today what it bought 2,000 years ago. I always tell people, look, if you had here, like in Philly, we had this a high-end men's clothing store called Boyd's, right? So if you buried a $20 bill and a $20, like still 1920, $20 was an ounce of gold, you could exchange it for that. Mm-hmm. And so if you buried them and then you went to Boyd's, you could get a top of the line men's suit at that time for $20, right? And so if you go to Boyd's with that $20 bill, I'll ask people, I'll do a workshop. I say, well, what could you buy with that? It goes a tie. You can't buy a tie with $20. The valet parking's $15. So you can't even you get a pair of socks. But if you hold the $1,200, you can still go in and get a nice suit for $1,200. Top of line men's suit. So it's the same.
Yeah,
and so what you're doing is that's so exciting. You got to tell them how to get a hold of you. Is that because see, the little people, the regular people, the middle income people need to be able to protect, because wealth isn't lost, it's transferred, right? And so you've got to be able to store some of your money out there where it's safe, you can get to it, but it's maybe outside of the fiat currency system, which is what I'm hearing. Am I hearing that right?
No, you're spot on, and I think there's a lot of merit to what you're saying, and I think we're going to see over time. I think you're going to see more education occur when it comes to precious metals. You look at the demand and the overall consumption of precious metals from an investment standpoint 20 years ago versus today, it's exponentially higher. Gold's definitely growing in its popularity as an investment option. The biggest challenge is getting the word out and educating people. And frankly, I tell this story. I got a buddy of mine. He's a Mensa guy. He called me up and he goes, "All right, man, I'm trying to get into gold. Can you walk me through how to do this? It's complicated, and I'm not sure what I should look at and how I go about it." And I got them to a good spot. I do think as products like digital gold become more prevalent, it's going to make it easier for people to get their head around it and easier for them to execute than trying to pick a product off a page that might have hundreds of options.
Yeah.
So I think as we broaden out or make it easier for consumers to own metal and broaden out the knowledge for people, I think you're going to see that gold is going to be far more popular in 5-10 years than it is today. And as we know, supply and demand, one thing we didn't talk about with gold is it's not unlimited supply.
Right.
So, as we grow demand over the long term, it should generally lead to a higher price, which is good for everybody who owns it.
Yeah, because you got to work, you got to dig it out the ground. You got to, it's hard. And then silver is a consumable. So
right.
It's a little more plentiful, but it's use it for mirrors and all the computer stuff, and so it's a consumable industrial metal. So it's money and a consumable. So
correct.
So you got to look at that, and I think it's definitely. And I love that you've made it easy for people to dollar cost average it. And if you got a little bit more money,
right,
you can take a bigger position. So if you got $100,000, it's not unreasonable to have $10,000 in metals.
Correct. I mean, we've actually had a customer on our OneGold platform do over $250,000 over the course of 2 months. I mean, it just whatever floats your boat. Whatever works for you. We've been able to make it easy. But again, for your listeners, I would really encourage them to read up and become educated on gold as an investment option. And whether you buy from APMEX or OneGold is a little bit less important to me that you decide to get into gold or silver. I think that's really the part I'd like to drive home. And I think you'll find, not to blow our horn too much, but APMEX has got over 1.5 million customers. We've done over 10 billion in revenue. We've got the best service in the business, bar none. No one even touches us. And I think you're going to find that people will get a great experience if they want to buy from us. But let's more importantly focus on getting people into metal, and where they buy from is secondary.
So you're being humble, but so how could they buy? How could they get into, if they like physical or if they like the digital gold? What's the, well, two questions. Tell them how to do that. And then what, I have my favorites, but what, if they wanted to start to learn a little about the space and educate themselves, what are some of your favorite reads on that?
Yeah, great. Well, I tend to, first I'll focus on the reads. I do tend to focus a lot on analyst reports that are not always available to the broader public. My go-to is the World Gold Council. Granted, their job is to try to drive demand for gold over the long run. But when you start looking at the material they put out, I find that it's quality material. And if you take it with a grain of salt, as you should in anything you read, I think it's really quality data supported. So you're not just kind of hearing someone's opinion. You're getting data to support their recommendations. So I tend to focus on that a little bit. Obviously, there's various podcasts as well as publications out there or websites out there you can try. I think you find a lot of talk out there. Just do a search. We find that places like GoldSeek and Kitco's site does a nice job of putting information out there with analyst reviews, and there's many podcasts out there on precious metals specifically that people can go listen to, that people will get their honest perspective. The one thing I try to caution people against when they're educating themselves is try to stay away from the guys that make it like the world's coming to an end, only because I just find that they're always so biased that you want some independence in the views you're hearing. And that's the only caution I would give to people.
Yeah, agreed. But in terms of, like, you could be like, walking around with 10 full hats on and build a bomb shelter if you listen to all that stuff. So it's like, look, you got to enjoy your.
Exactly. Just be careful of it.
Go down tomorrow night.
Yeah, that's my worry. Is some people claim, silver's going to go to 10,000 or 1,000. Guys, let's be realistic. It's supply and demand. It's economic driven. Let's try to be realistic with people. Let's not try to overstate things. Let's give you data to help you make your own call. Let's give you historical data. One of the things I like to tell people, if you bought gold back in the year 2000 and you went and you want to look at what it's worth today, there's only one asset class that outperformed gold since the year 2000 over the last 19 years, and that's real estate. Outside of that, gold is number two, and actually has a couple hundred basis points performance on a per year basis over the S&P. So, just do your homework, get those kind of data points, think about how long you want to be in the investment, and I think you'll make the right call.
And so how can they want to start to get some, let's say, digital gold? Because I think a lot of our listeners will, or both. Just tell them I'll put them in the show notes. Tell us how to.
It's gotten to be so simple. You go to APMEX.com on the physical side. It's just like, we call ourselves the Amazon of precious metals. You literally go in, you add it to your cart, you pay with it any number of methods that you feel comfortable with. And literally it will ship to your home via UPS. It's fully insured, so you don't have to worry about loss in transit, and you get physical in your home. And the key there is just pick the product you think's best for you. I tend to guide people to, if they're on the gold side, I say buy gold eagles, buy gold maples. I think you can't go wrong. Or buy gold bars in the size that you think is right for you. You're not going to go wrong with those if you're really buying for investment reasons. You're probably going to be in good shape with those. And then on the silver side, similar concept: silver eagles, silver maples, silver rounds, silver bars. You just can't go wrong. One thing you'll find in precious metals that we do a lot of is we're selling more and more, and we're seeing consumers like the higher premium, limited mintage, a chance for the investment to become more of a collectible. I just advise people to be careful on that. Make sure it's something that has longevity and there's some history behind products like that performing in the past. But there is a chance to make money independent of metal by the product going up in value due to its scarcity. So you see some people playing that game when they're making their investments as well. On the digital side, it's about as simple as APMEX. You literally go on. The one thing we do here is we do something called two-factor authorization, which I think is in anyone's best interest when they're dealing online. Once you confirm with your code, You literally just have to pick the product, add it to your cart, and check out just like you would buying physical. It's that simple.
Okay. I love it. And that's OneGold.com.
Yes, sir. Yes, sir.
Okay. Yeah, so we're going to put that in the show notes. Ken, I thank you for your time. This is, please come back when you announce the other things so we can show people how to cash flow and stuff. Sure. I want to bring that on, and maybe, have a gold report, towards the end of the year and see how we're doing. And, hey.
Yeah, we'd love to do that. And the last thing I would tell your listeners we rolled this out on Monday of this week on OneGold. One of the things we're actually doing, we're north of 10,000 visitors a week already in a very short time we've launched this program. There's a great video out on YouTube that explains the product. We got over 280,000 views on that product already. So take a look at it. But one thing we rolled out on Monday is anybody who creates an account, they automatically get $5 in free gold or silver. And the reason why we did that is we want consumers to try the platform and see just how easy it is to use the platform. So, if anyone was wanting to give it a run and didn't want to put their own money out there, just want to see how it is to interact with the product, take me up on it. It's automatic. When you create your account, you automatically get $5 deposited, and you can buy gold and silver, and you can play around with the tool a little bit. So just to make it easier for everyone to give it a run.
That is perfect. So we will put all of that in the show notes. And Ken, listen, I want to thank you so much for enlightening our listeners about gold. This is exciting, folks. Remember, we always say there's 4 asset classes. So when we talk about investing, or if you've seen our video on the website, the yellow tank, there's 4 asset classes: business, real estate, paper, and commodities: gold, silver, oil, and gas. So if you're truly diversified, you're in all 4. Okay, you're working towards being in all 4. So gold is money, and you want to hedge your bets. Okay, and so we love, my wife and I buy gold, and so this is spot on. Okay, especially when you can get into it, and you could put $50 a month, $100 a month. If you're starting out, you could put away. You could take your birthday money for your kids and buy some gold for them. This is awesome. All right, guys, I want you to go out there and make it a prosperous day. And Ken, thank you so much for your time.
Thank you, man. Appreciate it, everybody.
All right.
Thanks for listening to Practical Wealth. To access the show notes and resources, go to practicalwealthshow.com. To get your questions on the show, go to practicalwealthshow.com. This show is for entertainment purposes only. Before you make any investment decisions, consult a professional. This show is copyrighted by Practical Wealth. Written permission must be granted before syndication or rebroadcasting.